Hey there, my name's Curtis Lucas and you're watching Empire Building. So after the video I uploaded last night, the result of today was yet another bleed out in the mining stocks. In particular, Riot took a significant hit, dropping 6.5%, while the Bitcoin dropped a mere 1.5%, and even the NASDAQ overall lost only about 1%. So yeah, these mining stocks are particularly punished during these times. Now, as for the topic of yesterday's video, the 200-day moving average for the NASDAQ, despite the bleed out, we are on it as I'm recording this video. The aftermarket NASDAQ futures are exactly on the 200-day moving average. So we're going to talk about that and a few other things in this video. Stay tuned. So here on the daily chart, you can see we are right on that moving average. As a matter of fact, we've dipped slightly below it in after hours. We'll have a look at the closer term chart, 5-minute chart. We've just in the last 10 minutes dipped slightly below that line. Again, this does happen from time to time. We'll have to see how things play out overnight. But again, this is a very short-term reaction that we're looking for here. I have to admit, it's very tempting to trade something like this, but incredibly risky. At the open of the market this morning, we had already bounced off this line, and it did, to be honest, look like that we were probably well on our way to seeing that relief bounce. But throughout the trading day, we bled out yet again, rarely giving anything back. And now we find ourselves exactly where we are. So there's a few things I wanted to discuss here. In particular, the NASDAQ, but also for Bitcoin, things are lining up to a very critical point. Within the next week or two, we should see a definitive decision. Like I said, we're at a very critical support level for the NASDAQ. We must hold this if we have any chance of really seeing a significant upside in the near term. If this level does not hold, this is a very bad sign and a pretty clear indication that there is more sustained downside to come. But we are definitely approaching significantly oversold conditions on the NASDAQ, considering this is the lowest level we've been at since, well, any of the other downturns. Very rare have we found ourselves below these levels on the relative strength index. So me personally, even if there is further downside to come, I don't expect to see it immediately. But that's why this level is so important. Now, the thing I want to point out is over the next couple of weeks, there are some very important things as far as Bitcoin is concerned that we should be looking at. As you can see, I've had a few trend lines on this chart for some time now. This long-term trend line, ever since the beginning of the bull market, starting back down at 10,000, crossing over the lows we formed back ending in July when we began our new rally to new all-time highs. We find that everything intersects at this exact point. I've never seen anything like this. I mean, I may have fudged this line slightly. As you can see, the trend line doesn't exactly touch that, but for, the sake of our purposes, the point is that they're all converging in the same general region here. So for argument's sake, we've got the trend line that we've been falling under thus far, and the former trend line connecting the former two highs. And all of the lows since the bull market began all converge at this same point, which works out to January 26th. Now, I'm not suggesting that something is going to happen on January 26th. What I'm saying is between now and then, the market has to make a decision. Which trend line is it going to follow? But my money is on up because both of these trend lines, this one connecting the former highs of the respective cycles, we have, for the most part, maintained some level of support from that line. And also the major bull trend line. All we need to do is maintain our current levels without falling any further. And that's going to provide a pretty clear signal of strength. And maybe I am the eternal optimist. My default position is to hodl. In the end, I've always considered that to be the best strategy, considering the fact that even if it does go further, there's no guarantee that you're going to catch that new bottom or even a better price. What if it only wicks down and then recovers just as fast? There's no real way for us to know this. This is why dollar cost averaging and holding for the long term remains the winning strategy. There is no denying that that works when you're investing for the future in a technology that has proven itself. I saw someone in the comments suggest that I do a video looking at mining stocks from a much longer term perspective, say 4 or 5, even 6 years. I think that is worthwhile, but we do have to consider the fact that over the long period of time, evaluating these is not going to be as easy as we think. We can certainly project the cost of Bitcoin. We can project how much of these individual companies are going to be able to accumulate, and the profitability that they'll be looking at that far out. But I also think that these companies are going to evolve into something else entirely. That remains to be seen. But I mean, any company that can sustain and hold on to a significant amount of Bitcoin are going to have certain technologies and abilities available to them that today isn't immediately obvious. So that is an exciting prospect and something I'm going to reflect on and maybe come up with. And maybe while I'm at it, I'll get some input from these companies themselves. What do they think about that prospect? That would have been a pretty good interview question, but there's more interviews to come. We'll get into more of those topics. But another thing I wanted to point out here was, as you can see, I've sort of highlighted the duration of our last accumulation period. For those of you who are convinced in the Wyckoff distributions, this is something that's playing out yet again, and it doesn't look all that dissimilar from the last cycle that we just went through. And just for the sake of it, I thought I'd have a look and see how the duration of this cycle compares to the previous one. So if we actually take that same bar count in terms of time duration, that was 63 bars previously. That would bring us out to February 5th as far as reaching the exact same duration. Currently, we are sitting at day number 47 out of the previous 63. I don't expect we're going to have exactly the same number in this accumulation distribution, but I do think that it's highly probable that overall we repeat this same general pattern. So my main point for pointing this out is simply that if we are going to repeat a similar pattern, we don't have that much longer to wait to get our answer. Of course, there's a risk we could head lower. That's always the risk. And I've been through those experiences in the past. I also know that in the end, everything works out just fine, as long as you have a long enough time horizon. Now, I know we had all previously believed that we'd be able to get in on this, get out somewhere near the top, and then go off and do something fantastic with all of our earnings. I know I had held that belief myself, but that could still be true. It just requires a longer term outlook. Maybe it might be worthwhile asking yourself, what if the worst case actually played out? What if we did suffer a 2-year extended bear market beyond the next halving, and it took until then for us to re-extend ourselves, for the market to make a new all-time high? based on all the trends that I have observed in the markets today, I highly doubt this scenario. Bitcoin is a very different animal than it once was. It is far more accepted, but still largely misunderstood. And I understand why maybe some of the Bitcoiners are upset that a lot of these other projects steal away a lot of the thunder and interest, because a lot of that new money floods to those markets with the assumption that they could make a quicker buck. And this is true, and those markets do play out a lot more like Bitcoin used to. But the excitement for those projects have faded in recent months, with a few exceptions, which tells me personally that there's still an appetite for these markets. It also suggests that there could be further downside. But what I have found in the past is that when the reversal does happen, Bitcoin leads the way. It's always Bitcoin that rallies first. You can see those patterns play out when looking at Bitcoin's dominance chart. Altcoin season always is reflected when Bitcoin dominance reaches low points. And this was even more volatile in previous cycles, as the overall market cap of the entire cryptocurrency sector was significantly less. So those fluctuations were far more pronounced. But we've been a sustained downtrend in Bitcoin dominance ever since this bull market began, when Bitcoin broke out and formed its new all-time high at the end of 2020. We've reached that high point basically at the beginning of 2021, and we've been falling ever since. It was no different back in 2017. Throughout that entire bull run, Bitcoin's market dominance fell. But then once the bear market began, Bitcoin's dominance began to increase over the next couple of years. And even though Bitcoin failed to make a new all-time high during that time, it did go from $3,400 all the way up to $13,000 before falling back down yet again. But as always, I'm of the opinion that this market is not going to behave the way it once did. I really do think that these cycles have broken. We saw the last cycle we're going to get, at least in terms of Bitcoin halvings. I think Bitcoin is now going to more closely reflect the global macroeconomics and the geopolitical issues that we face, that it faces at large. Regulation is going to be a big factor in this coming year. Some of it's going to be good. Most of it's probably not going to be all that great. But the good thing about it either way is it will provide clarity. If we're looking for adoption, a little bit of clarity goes a long way, even if it's not the clarity we wanted. But with Bitcoin being an open system, I'm not all that fearful of any sort of restrictions that any authority attempts to place on it. Because being an open system, it will always be able to adapt and provide alternatives to those that need it. But generally speaking, for most of us law-abiding citizens, we're going to operate within the confines of our own jurisdictions. It still provides us far greater authority over our own sovereignty than any other option that has ever been made available to us before. But if there's anything that I have learned from this experience over the last year, is that there's value in holding the underlying asset. A lot more of it than I have in the past. In the case of Marathon Digital, we suffered a 70% fall in the price versus Bitcoin that's only lost about 42%. Still significant, but that is a wide margin. Having said that, we also did have the ability to benefit from all of that upside. You just have to be able to take those profits when they're offered to you, which is, let's face it, it's easier said than done. I do personally find it a whole lot easier to hold on to those underlying assets through these market fluctuations than it is to hold on to something that's still going to fall 70%. It is a hard pill to swallow. But since we know it can do that on its way down, we've already witnessed what it can do on its way up. And these miners are still just getting started. They've grown a lot over the last year. But this next year in 2022, the amount of hash rate that's going to be put online and their share of the overall Bitcoin issuance is going to grow. Now all that's required is for Bitcoin to establish a base here and who knows where we might find ourselves in 6 to 10 months. And of course, there's still what comes after that. So yeah, we are dealing with some tough times, but there is reason to be hopeful. At least I think so. Now, on the one hand, if we did head lower, it does only give us the opportunity to accumulate a little bit more through dollar cost averaging. But honestly, I think I'm good. This is cheap enough. I think at a 52-week low in the case of Riot, and not that far off in the case of Marathon, I think it's good now. We can go the other way for a bit. That's all for this one. Now let's get back to empire building.